Welcome back everyone, it's your friendly property expert here, and today we're gonna cut you some slack and answer 10 awkward mortgage questions you're way too embarrassed to ask. Have a couple of those in your mind? Then let's begin. Number 10. Why should they know from where the money in my account is deposited? To start the list, we have a question that is probably the very first to pop into your mind when you start the procedure for getting a mortgage. Worry not, that is exactly why we are here. Large sums deposited which are not linked to your income demand some explaining throughout the mortgage approval procedure. A contractor is often requested to verify a substantial deposit to confirm that this comes from an approved source. It is just another way for a contractor to verify whether you have any new, recent or upcoming loans or credit line which may influence your debt-to-income ratio and, in turn, the volume of credits that you may promise. Number 9. I am in debt. A great deal. Is it possible for me to get a mortgage? It's important to know that in such a case, not all is lost. Firstly, determine the ratio of your current debt to your revenue. You spend on reimbursements every month, which affects the money you may loan, and how many lenders are willing to take your application into account when applying for mortgages. If you can pay off part of your liabilities before you submit for a mortgage, or if you are able to establish a repayment scheme, you will be favored. We propose engaging a full-service broker to assist you to discover the best offers for customers that are difficult to find on your own. Is it possible to refinance it when in debt? Yes, you might be able to do so. You will be evaluated in about the same way that you would have been for a first-time mortgage. Debt restructuring mortgages, for example, are available, but you should consult a professional. You have one right here. Before finalizing your judgment, we enjoy talking commerce and addressing all of your pesky mortgage questions, so jump right into the comment section and we'll do our bit in helping you out. Number 8. What would it imply for my mortgage if I'm self-employed and paid in dividends? It relies first of all on the sort of your self-employment. For instance, as a business director, your CPA might advise you to receive an income up to the non-tax level and then distribute any extra revenue. To relocate an appropriate creditor for such individuals, you need more specialized information about specific options. Given that tax obligation is lower on income from dividends, some banks will be prepared to offer further than customary, so you have extra money monthly in your wallet. You will certainly require sealed clients when it pertains to maximizing your revenue as a limited corporate director. Normally, you must also present your company and personal bank statements for the previous 3 months. It normally varies depending upon the particular lender, but with these documents, you're well equipped. Number 7. What do I do when the mortgage company loses my payment? It's very crucial that you approach their customer care or service number promptly in case your transaction has been lost in the post, or if you suppose your mortgage provider or loan creditor has misplaced it. Your creditor can assist you in tracking your transaction and in crediting it appropriately to your account. Please call your banker if you have paid via check to determine whether it has been processed, and keeping that information close is helpful. Your bank can confirm whether the money has been transferred and deposited and where, so that evidence of payment may be supplied. If you have misplaced the payment in your mailbox, please contact your bank immediately to hold payment. Then call your service provider to inform them that you are going to submit another deposit. It is advisable to make online payments and check every monthly payment to avoid errors relating to communication and prevent your loan from defaulting. Number 6. I failed to pay my taxes on my properties and I got my creditor's notice. What am I to do? Householders pay property taxes for local and regional financing. Your regional tax department will charge interest every month in case you miss or fail to complete your property tax payment. You also receive late payment fines. If this persists, you will be given a tax lien on your house, which means you may not put your house up for sale till you pay the tax debt. It's vital to approach not only a tax attorney but also your loan supervisor as early as possible if you got a tax notice or a letter from your creditor. If property taxes are not paid, it might be termed an event of delay. Thus, even while completing monthly mortgage payments, you can run the danger of seizure. Number 5. I loaned an amount without my partner's knowledge. Would I be required to mention this on my application for mortgage? This has to be one of the worst of all embarrassing issues that first-time appliers have. It's generally preferable to come clean and be honest regarding your money from the start if you plan for getting a mortgage with your spouse. If you've not skipped a payment, it seems to be working for you to make regular monthly payments. You must fill out the application in conjunction with your spouse for a joint mortgage by providing information on earnings and spending on the same application, preferably with the same pen. It is doubtful that you can hide your loan information, but if that is what you're concerned about, you won't necessarily have to disclose the whole borrow amount. Number 4. I'm planning to get a mortgage with my spouse or partner. How will things go down if we get divorced? With the unpleasant mortgage issues we have going, this is much simpler. We pray that you and the missus will do well and will not require the following counsel. We would, however, recommend that if things become rough and they no longer stand your loud chewing, get tenants in common agreement. This includes exactly the amount each of you contributed to the mortgage, as it is not always a really clean ratio of 50-50. Any rise in equity and the contract should be established correspondingly. This implies that you are able to sleep at night because you know everything fair. Anyways, we are still rooting for you not to need this one. Fingers crossed. Number 3. So what do I consider avoiding in the months leading up to my mortgage application? This is yet another question that is popping up. We touched on the matter before, but let's take a closer look. Essentially, a couple of months before the procedure, try living like a hermit and you should be good to go. That implies the excessive credits are paid and sealed, along with the alcohol and, stuff. Perhaps just reducing the mead and the costlier expenditure should help. Eliminate takeaways, cabs, and your occasional online shopping sprees due to the lockdown, and also do not get any new loan. Suppose you plan to make a significant transaction, attempt to postpone it and refrain from making huge payments or withdrawals. You'll appear as suspicious as your dog laying on the cooking counter, surrounded by spilled spaghetti. You would not want to be refused for what might appear to be any little and insignificant cost. Therefore, be tight with your expenses and your money, and actively avoid getting carried away to get your hands on the influencer's eyelash growing formula, which surely doesn't work and ends up leaving your eyes barren and weeping. Number 2. Will I need to disclose to my agent my food orders and other things? This is an interesting point. Yes, in a word, it's uncomfortable to put it mildly, but those guys are obsessed with knowing what hamburger extras you order as well as what you spend on getting that extra cheese on the weekend. Guessing what would happen if you spent a couple of dollars on an astrology application? They're going to be curious about that too. Obviously, this also applies to recurring payments, services like Spotify and that old magazine you managed to forget you were still being billed for. Our tip: if your funds don't seem promising at all, get to your budget right away. Prove your efficiency to survive routinely 3 to 6 months before your application. Furthermore, settle your bills and reduce expenses. Number 1. What will happen if I am unable to make my mortgage payments? Alas, if you end up having yourself in this situation, it is a genuine horror. Nevertheless, the dumbest way to go is to ignore it and assume that it'll disappear. It won't. And if you understand where to seek or who to approach, you can get assistance. Please contact your creditor as quickly as possible to let them know if you're having problems with transactions. You might be offered to postpone a payment, enable a break, or even prolong your mortgage period to make transactions more affordable. Please calm yourself and know that everything doesn't end if you've had significant issues paying your bills and are at genuine risk of having to lose your house. There are various schemes to help your cause on behalf of the state, and they are well worth looking into. For most of us, the pandemic wasn't very pleasant economically, and creditors understand this. The correct understanding plays a vital role in such things. Thanks for watching.